Hello, Jamie speaking. Are we live? Is the audio working? Is the video working? Let me know in the chat box. Let me actually see. Is there a chat box? Audio working? Is the video working? Let me know in it. Oh, I can hear myself. Right, I don't think I can hear myself anymore, though. Can you still hear me? Is it all working still? I don't see the chat box popping up. Where is that chat box? It's correct there. This is all correct here. I see it. The chat box is there, but am I live? What does it say? Yes, sir. Hi, Jamie. Hi, guys. Great to see you here. So this is an unlisted video. Only those people who followed the link at the end of the meme or found the clue that that was happening on the Discord are here now. So a very special exclusive show for you privileged few. Thank you very much for following those clues and finding your way here. Great to see everybody. Depending on the content, which I can't be 100% sure of yet because I haven't actually made the video clearly, I may or may not make it available publicly. I haven't put it out on Twitter, and like I say, it's not available publicly on YouTube, but I may make it available for members. And if it is that I'm super positive about everything else in the markets and wouldn't attract the ire of certain types of people, then hey, maybe it'll go public too. So ladies and gentlemen, welcome to the show, this very important show. If you haven't watched Tradespotting before, it's amazing that you managed to find your way here. Congratulations. We're going to look at the outlook for LivePerson, LPSN, ahead of earnings. It's piqued the interest of lots of people who follow along here, especially with that upcoming earnings report. This is a very important look then, a detailed review of, well, I say a detailed, but we're going to go back on, look at what happened in the last earnings, the important details that I would find pertinent, and what we might want to then see from this Q2 2024. So a little bit of a look at that stock for those enthusiastic traders. In the most recent earnings review for LivePerson, the first half of 2024, we had the Q1 earnings report, and then we might take a comparison then this Q2 to how the company has performed since then. But that only really gives the new board members 6 months to enact a very difficult turnaround plan. And if it is that you're turning an oil tanker, it can be, you know, you got a burn to turn, and it can take a little bit of expense and time to kick that ass out wide. So we would be very forgiving with the new board if they don't manage to achieve exceptional results quite at this new dawn. But if they do something positive, then that's even more significant. In the first half of the first half of 2023, we also get a good comparison then between the company now and how it performed at the same time last year, which is interesting because AI has moved a big way since then. The sector is very cutthroat, and we've got a lot of information to go on if they do manage to do well in this really competitive sector. So in that period last year and the period of the year similarly in 2022, it's important then to pull out the earnings and to look at the revenue, I think, for LivePerson. Total reported revenue in the first half of 2023 was 205 million. That was a decrease from 262 million in the same period in 2022. So there was a decline of nearly 60 million in the revenues between 2022 and 2023. And then if they can slow that descent, right, like they don't lose 50 million off that previous figure and come in anywhere above 150, then you would say that the rate of reduction is possibly changed in terms of the dollar value. If it, as well, it's a lower percentage haircut, that's even better. And who knows, right, it might not be such a drastic move in earnings at all. But that was a significant decline between 2022 and 2023. So in that particular metric, you don't have an incredibly positive value. Part of the reason for that decline was the strategic decision that LivePerson took to exit their lower margin and non-core business lines. That was specifically hosted services, and the revenue dropped from 168.6 million or 268 million from 219 million. So a good 50 million then off the top side of that hosted services. And then professional services revenue also dropped by about 20 million. So significant issues there with revenue, but partly due to the fact that there's a refocusing going on at the business towards those core business principles and towards that main revenue segment that they generate income from. They have made substantial progress in reducing their operational expenses, but we have identified this as perhaps the most acute area where things could, a little bit of extra flexibility could lead to a really large extension on the runway and then very positive implications if they can manage to plug a little bit of those holes and keep reducing those operational expenses. Now, that isn't saying that LivePerson's main objective, or it's even particularly important that they cut costs. It's mostly we would look at that operational costs as a reflection and as a ratio of other metrics such as the revenue. And so if they can improve that ratio slightly, then that would lead to a greater dynamic across the business. And that's one of the things we like to see. If you find any of this complicated, don't worry. I'll be talking about it in greater detail when the earnings report comes out and referencing the important factors that have changed, along with price, obviously. So making substantial progress in terms of their operational costs, but that isn't the biggest focus. It's mostly looking at it alongside revenue. It dropped from 23 million to 11.3 million net credit due to reversals and cost-cutting measures there in operations. And product development costs also fell dramatically, but again, that's not particularly important in this exact instance right now. Also, you're probably aware the CTO's recently left, the restructure in the board, still adding new members, and maybe we get news about that soon. So despite that reduction in the revenue, the company did manage to control their losses to a large degree in the first quarter of 2023. And so the adjusted EBITDA rating was positive, ranging from 15 to 32 million, which indicated a stronger margin. And that means that there's a degree of flexibility for those people working within the firm to enact some of this turnaround. So the company's ability to generate earnings from its core operations actually improved, even though there was a little bit of a cut there with regards to the overall revenue. That is to say that their margin ratios improved. And so the rate of change, if it accelerates in that aspect, is very, very positive. Future outlook from this earnings that we're seeing tomorrow will be how we take the guidance that comes along with earnings and how they talk about what might happen for the rest of 2024. They have a guided revenue range of 388 to 400 million, which reflects a year-on-year decline. But like I say, it's about that ratio and how in a transition period, how these factors change. So the focus will still remain on stabilizing the business, reversing the revenue decline by focusing on like high margin services in their core business, while the new CEO, John Sabino, he's obviously going to be detailing how he feels that the turnaround has gone so far. So we're looking forward to that, and how they talk about their own innovation with and how they're going to apply it in future to AI and digital customer interaction. So the guidance there, specifically about those key metrics, those key financial metrics, and that accounting analysis will perform afterwards. That's what the thing we're looking to, but we're also interested in the guidance and how Mr. Sabino sees the rest of the year going, and how he talks about these things will clearly reflect his leadership style and his vision for the company, which is cornerstone to any investor who's looking at a long-term purchase in any stock. You're interested in the board and their approach to applying that particular business solution to whatever the problem is in the market, how they see that working. And then if you are aligned with those being the areas where a lot of money is to be made, then you're likely going to think that the value of the stock will go up, especially if they improve those accounting factors we talked about. So as we await that earnings report, it's important to understand how we put it in a broader context. The stock market rewards people who are able to anticipate how everybody else will anticipate the results turning out. And this is why John Maynard Keynes described the stock market as very much like the old-fashioned beauty pageants we had here in Britain, where in less PC times, people would send in their picture to the newspaper and everyone would vote on where you thought people ranked in terms of attractiveness, right? Now, I wasn't around back then, otherwise I'd have a collection of awards sat behind me. But the way it worked was you would win by picking how everybody else was going to vote, as opposed to how you felt like your own personal opinions on the photographs. And so it was about anticipating how other people will react, as opposed to necessarily figuring out the exact facts of the data themselves, which will become clear to everybody at exactly the same moment. And that's how you get an edge in the market, is through a degree of anticipation. And it may well be that you then can't, in the most competitive arenas and in the most hardest won battles in the stock market, it may well be then that you can't rely exclusively on the publicly available information, because everybody else has access to it, and some people will be getting their eyes on it just before you do and might think that little bit faster and then make a decision which takes the margin you were going for into their own pocket. And so that's why it's often said by really good traders that despite you can be very good at understanding a chart and you can be really good at reading the fundamentals, but unless you have a way of anticipating and having that gut feel for where anything's going to go, then it can be very difficult to have a reliable edge that's sustainable over time. So a lot of being a really good trader does come from exploiting the benefits of your own personality and then getting to that level of competency, knowing yourself well enough to be able to behave that way. All of these things require you to be doing the work, putting in the hours and getting the experience of being a trader. And a massive benefit we all have here is that that's a real strong cultural focus in this channel, this community, the Rocky Outcrop Discord. And as we interact with each other, we all benefit from each other's improvement and progress, and which is one of the reasons why you guys are absolutely brilliant at what you do. It's because you have each other, and I share in that advantage. So thank you very much. So we're waiting for those earnings tomorrow. We're aware of the important metrics to look to. Part of that is because previously the old board were leaking customers really badly. So customer retention is important. It's also good to see then customer acquisition, and if that's increasing at a positive rate while customer retention is improving upon previous figures, then that would speak to market growth, that would speak to growth in market share, and all of these things would be super positive for a company, regardless of the bottom line figures on the earnings themselves. So these are nuanced details, which is why if it does come out that earnings aren't necessarily what someone expected, if you see the ratios improving in line with your vision for the company, then it could still be very good news. And it's up to you to make your own mind up, not to take the implied information from the next reaction in price, because you might know better than those people who immediately react to the news. So the key then is patience, belief, and consistency. Consistency requires simplicity so that you can repeat that behavior and get it right every time. Belief will require you to share the vision that the CEO and the board have for that company, which is previously not going to have been true, but now potentially is. Thank you very much. Minner gifted a membership. Congratulations. Kube Fora, who got that there. Say thanks to Minner. You're married now. So you're waiting for the right signals, and you get them by being patient. You don't get them by just, buying and then acting later. And that was an important message from the recent book club. If you're not on the Discord, then you're missing out on so many different opportunities to improve as a trader. The fact that we are feeling machines who think later, as opposed to thinking machines who add in our feelings. which is why a bias can be so very dangerous, and you need to explore your thoughts and investment thesis so that you're really confident and hold the courage of your convictions. As retail traders, the dream's always to find an explosive move, but doing that without these skills is nearly impossible. So again, we really benefit from each other's approach to the charts and to our own development here. And on this occasion, it looks like we've managed to get into a ticker that's a little bit like it's experiencing relative obscurity compared to its potential to move center stage. And I think an awful lot of online communities are going to start getting interested in LivePerson over the next wee while. If the CEO of GameStop continues as he has been doing, then he's going to continue to leak people to this stock. Now, that's not me coming up with, definitely not me trying to influence people's decisions. If you've watched Tradespotting before, which most people who are arriving at this episode will have done, then you'll know that's certainly not my intention. But it's a fact, and I can tell you it's happening. You yourself might know this to be true because you'd be one of those people. And it's certainly not me, like I say, controlling his mouth or tippy tapping with his little fingers. And it's very difficult for me not to say that a big part of my principled approach is to stick up for marginalized communities. And I really find it incredibly distasteful when the CEO mocks people of any particular any particular subculture. I find it really, really, and that's putting it lightly, right? It's a lot bigger than a subculture. But when people mock and exploit and use vulnerable people in order to create a sense of humor, I don't find it funny at all. I find it incredibly immature, childish, and distasteful. Never mind from the CEO of a company I'm investing in. Anyway, I'm going to quickly move on. So LivePerson, it's got an innovative approach. It's got a brand new board. They're going through a period of transition. They've got important metrics coming up in the earnings. We're going to pay close attention to them. We're going to focus on these fundamentals tomorrow. We're going to look at the price as well as looking at it here now in a moment. And we're going to be ready to act with the market presenting us an opportunity. Remember, every trade isn't just a transaction. If it's a long-term investment, then it's also a commitment and a belief in the potential of a company's journey. So stay motivated, stay informed, stay classy. Into the charts here. This is them. Post-market, 1 spot 29, closing today at 1 spot 29. Price action coming up and tested that area it was at previously, putting in a higher high and also putting in bearish divergence, failing to get into the bullish control zone and suggestive of a potential failure swing. At this point, price likely swing failure, right? You're swing trading. You're taking it from the low within a trend to the high within a trend. You're not trying to predict prices moving outside of the trend. The trend is your friend until the end of the trend, as Rocky Outcrop very often says and reminds you of. So perhaps price comes back down and tests the low side of that trend. Where might that trend be? Well, there's various ways of looking at it. Here on the 1 hour time frame, this diagonal trend line here already cut off lows even on 15 minutes. We were doing it to express how bullish price action was, and we changed the angle to make it more acute to communicate that point in yesterday's show. But if you were looking at it on, say, the 4 hour time frame and then making sure that it did touch all these previous lows, you could say 1, 2, perhaps this is the third touch, which gives it validity. And so price action not breaking that diagonal, that's a positive thing. Even if it were to break and return within it, within a couple or 3 closes, then you would have experienced all of tomorrow's price action and previously come down and tested this important horizontal, as well as the diagonal itself proven valid in that price returns back to the top side. So that's something positive we're looking to if price tests that important horizontal. If it doesn't hold, then you've got a really strong area of a gap on a 4 hour time frame where you've also got this horizontal in at around 99 cents to $1. And that's a clear psychological level. It's even more important because GameStop has finished now day 7. Right, day 7 or 6. I'm now myself getting confused. So you can, somebody in the chat box will bring me back to this current timeline shortly. GameStop's going through this period trying to recover it from delinquency. That's the notice you get from the exchange when your share price is trading for less than $1 per share. You need 10 days in a row 10 business days to close above that level, at which point you will escape that delinquency notice. And very, very few companies do that. So it's really exciting to see LivePerson achieve these sort of targets, which it's currently doing, right? Day 7, lucky number 7. Post-market is a wee junk there. The volatility we see in post-market on LivePerson expressed in that sort of percentage move is reflective of the low share price that it is at the minute and the great imbalance at various periods with regards to demand and supply due to low liquidity, because it's only really very small areas of the world that are anticipating what we are doing with this stock. Most people have never heard of LivePerson, and when it comes to AI, I've got a very narrow and well-trodden selection of stocks, which is why they themselves are making far less money on the moves in the last few months than this thing's been making for people. Right, and when it does reach their level of conversation, when it enters into their consciousness, at that point you could expect to already be very, very rich. So breaking through that level might take, right, 122, 124. Price action got to a low of 126 today. If it doesn't hold 124, then it maybe is that it comes back down, fills that gap, and tests this important horizontal, which if you're looking left is also in it around these previous highs from the middle of May, which was previous resistance and now potentially support. If it is to find support there, that would be quite high and far above the basis line of this channel. If it is getting down to test that area, then maybe you're testing in at around 80 cents. And it's definitely possible that it could go to any of these 3 levels without there being any real negative news because of the nature of this technical artifact we see on the RSI. The confirmation you'll get from that is when the RSI goes back below the center line here on the 4-hour time frame. So if you see that signature, you could anticipate price coming down lower and testing potentially $1, maybe slightly lower. It doesn't speak to, a failure swing doesn't say that price is definitely going to hold support when it returns to that side of the trend. You don't know exactly where that's going to be yet. It could obviously be where price is already. But if it does come slightly lower, then it doesn't speak to the fact that that area is going to hold. It merely details the potential for price to move in that direction and that distance. And so there's no guarantee these levels will hold, but they'd be very, very strong. If the contextual information I have is true about other people's approach to this stock, where they're stacking their orders, and perhaps you might also agree with me if you're able to see any level 2 data, or if you've been looking at the option chain recently, you would see this is very, very important. And then maybe you yourself are one of the people that are in my DMs talking about the millions of dollars that you've got waiting for enter in LivePerson, in which case you'll know all too well how important $1 is. And I'll see you on the charts tomorrow at that area or back to the top side, because the same people have got a very patient approach, don't necessarily desperately need to make billions of dollars off this trade, and will be looking to take that position should it break back above 157, 159. Then they'll be looking at price moving to the top side, particularly it was at 160 yesterday. If you can get back above that level, those same people who've got a lot of orders stacked at $1 will perhaps be putting in trades and taking price back to the top side here, which is reflective of how price is very volatile and the move to the top side, a lot of velocity in a breakout trade. So it may well be that if price moves back above this downward sloping diagonal, that would say that the failure swing has failed. That would speak to the bullish divergence you'd get, because price obviously not as low as any of the areas in this previous oscillation low, but the RSI much lower already, which speaks to the fact that there's less people convinced of the strength of this move as yet, which has 2 implications. One, it could fail, and then reaction to the upside would be absolutely spectacular, or potentially that trend on that momentum accelerates and you see it pass through the center line, when a lot of people then lose confidence, and that could speak to a larger move, and which is why the gap between this support area in around 124 to the next one at 99 is much bigger than any of the gaps below, in terms of not just the dollar value, but then even more so the percentage move that price could go through if it does not hold any one of these levels, right? So just to be clear, the artifact that we're seeing on the charts here has specific statistical probabilities, and if it is that price is to accelerate in this ambiguity and create a definite downward trend, you could see a big move from 124 to $1. If instead price is not going to do that and momentum catches up with the current picture we've seen, in that it's pushing lower and price isn't yet. And then therefore the bearish thesis is disproved with price action in the relatively near future. Then the people who were pushing price down, of which there's less than there was previously, acting on price, or the fact that there's so many here in a failure swing trying to push it down, yet price is being absorbed in any of these moves down so that it doesn't get as low. That speaks to their weakness, and all of that will reverse as price moves back up again, because those people don't want to be having to close out those positions back above 179. Obviously, you've got this huge gap looking left. I mean, I say obviously, but if you've watched Tradespotting in the recent past, you'll be well aware of this huge gap. And so if price does break back above 177, 179, they'd likely be trapped in that trade all the way up to 238. In fact, it could well be anyone who's foolish enough to be short in this stock, who in that reversal of their position pushes it through this area, where a lot of other people, you know, along with the millions of dollars on the books at $1, that instead decide to enter here in a breakout trade. You know, those people will have very little place to go at low liquidity. There'll be an imbalance between demand and supply, and so for a variety of reasons, the potential for price to experience extreme velocity between 179 and 238, 240 is very, 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 very likely. So we'll be cautious of that. It would also give us then a confirmed formation on the chart, that is a channel breakout, the measured move of which could be said to be not too different from that there. And then if we do drop it on the top side from where price breaks out, then it may well be that that move is confirmation that this previous formation is over, and you'd be looking left to important horizontals on the chart here. It doesn't necessarily go that full distance with the same degree of velocity, and price does tend to oscillate, so it may well be that it finds support at previous resistance as it breaks through some of these levels. But you can see looking left that this is a very crucial level for price, in that it put in an important harmonic at that area previously on the chart. This being a deep crab, testing back at those levels is very relevant. And if we take that C to the D move, you can see that in and around these levels, that would be back towards a 1.13, and that's not uncommon to see that on a deep crab if price does go up to those targets. So makes sense then, in retrospect, looking at price testing in and around 450 to $6 to say, well, we had a strong suggestion that that might happen, and the narrative that took it there was well detailed. We followed those steps, and I say we, but I mean LivePerson, but then I'm very much a live person. Then it would be, you know, we'd be able to look back on that and say, well, we saw how we arrived here, and in advance we had that map, that complex map. The terrain itself, we don't know, we haven't experienced, but we've got the map, we know the direction, and more or less we know if it's a left turn, a right turn, or a left turn out the window. Shout out to the owl. So that's a 4-hour time frame talking about the potential for price based on the reaction we've seen on the momentum indicator. But putting that in context overall, it's very much higher highs and higher lows so far. And it's not the linear trend that you're looking to. Again, shout out to the owl. But instead, the trend that's forming in terms of momentum. And that gives us this really important level where you've got... I'll just recycle this, putting it in the wrong place in the first instance. 1, 2, 3 touches here on the low on the RSI, which speaks to a trend in momentum. And it will then could be that price does touch just below that center line, find support at that important trend line, and that's the momentum, and bounce, right? And if the momentum bounces here and pushes its way back into the bullish control zone, you would then potentially say that that was a higher low. If you were to look at it as a retracement from this high, you might be taking it down to that trend line, saying breaking back above 55 on the RSI, certainly back above 58, would be enough of a move on the momentum to constitute significance, which would then allowed us to denote this previous oscillation as a local low, and therefore compare it to previous lows on the same move on price action. And again, then a higher low doesn't necessarily have to match this trend line, this linear ascent that we've seen on price, but it could be that we experience something similar on the momentum and then price boosts from those levels. So very positive potential outcomes, even if the RSI and momentum does experience a degree of weakness. And you've got the potential for that also quite clear here on the MACD, where the signal line has been broken there. Signal line's broken through, and it looks like you've got a negative cross in the 4-hour time frame, which certainly could come down and test somewhere towards the 0 line on the MACD. But I'm not a massive fan of using the MACD in terms of that particular signal on this time frame with that type of context. I'd much prefer to take it on something lower. And here you can see that price is below the center line already. You're in very close to seeing a positive cross here. Because of the nature of price action previously, I wouldn't necessarily anticipate the statistical likelihood of this being the same as it would in very many other occasions. That's a signal whereby you get a positive cross with the MACD in the signal line from below the center line when price itself is above a 200 period moving average. And if I turn that on now using the rocky outcrop, yo, where is it? All I want is the rocky outcrop toolkit. That's all I ever want. It's up here too. All of this. Ugh. You might also use the 50 simple period moving average for this job. Here's both of those turned on, and Zapers Creepers. There's turned on there. So there's the 200 period moving average. Price is clearly above it, and in that type of reaction, then should you get this cross on the 30 minute, it may well be that price does that in it around that important horizontal we've identified, or having touched there, or at indeed immediately on this trend line it's on at the minute. I mean, price is very volatile on Lisbon, and it could easily do that and put in a higher low. But if it does make it there, that's also a 236. If it doesn't break that level, you might suggest that the bullish momentum is likely to continue. And even if it did, there's a 200 period moving average in at around 111. Now, if you watched Rocky Outcrop's video closely, you'll see that he identified that as a potential retracement target. Now that the 200 period moving average has arrived there, that's not a coincidence. It speaks to the validity of his process. In around these areas, it may well be that price takes a little bit of a bounce. If not, then you've got a 382. It could break the 200 and come back. But this particular signal, should it work out, would be bullish for price in the short term. And then you'd be looking at this oscillation. Back that you've got the 50 simple back above there at a previous important area is the prior daily low. Suggests that there might be a degree of resistance and then some congestion in price action. So not everything is clear from this particular signal when you put it in the current context of price. And so always you need to pay attention to the circumstances in which you're operating, and they'll have an implication for your edge. My edge in this particular moment is less effective at delivering clear trading parameters because of the nature and the context of price at this moment. So that's something to be aware of on the short-term timeframes. But that's where I would use the MACD for a valid signal. I'd obviously have to put it in its own place, look at the current landscape, and so on. But with regards to the 4-hour time frame here, I wouldn't necessarily be able to take that cross as overly significant, though price is testing that trend line. And a lot of people would then look back on it and say, well, I noticed this and this is important. But making an actionable trading strategy from that is not actually something I suggest is particularly easy. You know, more power to you if you're able to do it particularly well, but in my experience it isn't the most reliable approach to price. So that's what we're looking at on the 4-hour down. Now you could look at this in lots of different ways. You could be up on the daily time frame, at which point there's very little to say other than this thing's incredibly bullish. It's gone through a 236. It's held that 50 simple here in terms of open, close, open so far, and could easily go up and fill in the golden pocket and test the bottom side of this gap towards that area at 179. And that's a perfectly adequate way to look at price. It's just that many of the areas within this trend line, this trend to the top side, these horizontal lines here, could easily be tested and constitute a higher low, and that thesis still proved to be true. So what we're really doing when we go to the 4-hour and the 30-minute and so on is that we're trying to analyze the component parts of that move and how likely it is that price makes any one of those ahead of continuation in this move to the top side, which again, if you've been watching me for any amount of time, you know I have a lot of faith in. So I mean, I don't. That's not going to stop it, right? It's certainly not stopping me. And then there's the 86 at $3, and that's probably going to be broken. There's the previous target is taking that high in this Fibonacci from at 4. You know, I've said all of these numbers, and I'm pretty sure all of them are going to happen in the near future. And I say near, medium sounds better. Near is often misinterpreted. So that's what we're looking at on Lipson from the top side down through all the little moves. And has anyone got any particular questions about that, seeing as yourselves have managed to make it here? Let me know if you've got any questions and I'll do my best to answer them. See the chat box there. Not desperately busy, but then I didn't anticipate it being so. Congratulations on making it. Day 7. Lisbon bro. Howdy, Obi-Wan. Problem with RC's tweets is that whatever he was thinking is going to piss off half his customer base. That's very significant that his customer base will be pissed off. Also pisses off lots of people of principle who don't appreciate somebody doing what he's doing at the minute. You know, there are various mechanisms for engaging with your shareholder base, for distracting those people who might be against you. There's not the same people there, obviously. I'm speaking to two different potential motivations for his behavior. But there's lots of different reasons why people might act in order to, you know, fight the good fight. It's just the means can never justify the ends, right? Otherwise, you put yourself in danger of alienating those people that believe in those ends. And so I personally, and it's very much my own personal opinion, you can feel whichever way you like, I personally don't appreciate it when vulnerable communities or marginalized people are used in order to create a joke for others, right? I don't think it's funny at all. So I'm not a huge fan of that behavior. Boom. So I'd agree with that. I definitely don't think that it's irredeemable, though. I mean, people make mistakes all the time, and I'm very, very forgiving. I'm hodling, not day trading, going to $9, and I'm good getting in anywhere right now. Let's go. Bacon pancakes. Yep. Yeah. A lot of people catch themselves out with the intraday trading. There can be lots of different dangers. You know, you might end up trading counter to your own long-term thesis, or you might miss those moves. Or indeed, you might perceive yourself to have missed those moves and then trade emotionally. And so, unless you're very disciplined and you've got a great control on your emotions and you're very competent with the charts, it can be difficult to exploit these smaller oscillations. And I say smaller relative to the moves on the chart rather than speaking to the percentage moves, because they're obviously quite great when a stock is trading so low. L. Baker Matthews, I love watching Jamie do TA more now than before. I understand so much more now. L. Baker, you're absolutely flying. It's great to have you. You've got such positive attitude too. It's brilliant to have you part of the community. Going to break the feck out, says Bacon Pancakes. Coming in like a wrecking ball. You saw that meme earlier. Brilliant, isn't it? Hello, Willful Lockie. Are we getting a maglev of pain chat at $4? Oh my goodness. I will be extremely excited. What is your medium-term timeframes? Yeah, just slightly further out than the near-term one, sir. Riley Gregg, Tradespotting, do TA targets ever have a time frame of when they might be reached? Yes, if you saw the Tradespotting iconic chart where I drew out the Tradespotting logo, put the little S with Edinburgh Castle in the background at where support would be, and did it long in advance along with an entry, all of the different levels price would see resistance in advance, and how it went right through it in perfect illustration of predictive abilities that I possess and nobody else does, then you'll see that it can actually happen on the rare occasion. But the only person who can do it properly is me and Rocky Outcrop, because he shares some of my same genetic soup abilities. But literally no other person in the world can do that, unless, of course, they're trading on insider information. And I don't have that. I just have intuition and really, really well-honed skills. Yesterday, you were discussing that this is a different play because there aren't all these actors working against Lisbon going up. Do you expect $1 to be a battle? Well, a battle to see who can get the most shares at $1. Definitely. You're right in that those are two different component parts to that question. I know what you're trying to get at, but the terminology used wouldn't necessarily be clear to everybody else watching along exactly what it is you mean in terms of a battle, especially with that first component part about speaking about short hedge funds. LPSN is very different from other stocks in that there's very low short interest, and the institutions who would typically engage on that side of the trade have very little motivation to do so, right? They recognize that this company is going through a period of transition. They're aware of, many of them, I can speak to a fact here, many of them are aware of this community and this community's experience and what this community is doing engaging in this stock. I'm not saying that scares them, right? It could easily be a profit signaling mechanism should they be that way inclined, but they see the stock as strong and having a very bright future already. And so with this added aspect, it adds a degree of volatility and reduces their reliability of their own approach should they be on the house site. So it's not necessarily as attractive for that type of entity to engage on the short sell in LivePerson. And so that's not meant to speak to a distinction between LivePerson and GameStop, but merely to detail some of the facts about the culture on the market with regards to this stock, and so likely as to the conviction of your own beliefs. And sometimes you just need somebody else to say something that you yourself think, which is what we have there. I just clicked the like button on my own video. Woo! I have 7k landing Monday. I'm praying for it, Joe. Good to see you. Glad to hear it. Oh man, I found the stream real late. Going to start from the beginning. Good idea, Alex. There's very little gaps in the stream. I am aware I'm speaking very fast and going through things at a bit of a rapid pace, which is why we've got this chance for questions. My question must be terrible. What did you say in each row? Go back and find it. Tradespotting. If the earnings are viewed as negative, how do you determine the velocity downward of a move to $1? Is there enough liquidity to drop that much after hours? You don't need liquidity for high volatility. The less liquidity means the less on the books. And so if somebody comes in and sells 500,000 shares, then during market hours, there's likely to be a higher degree of liquidity. That'll be on the books, because that's where it is if you're going to call it liquidity, right? It can't be in my pocket. It has to be there, deployed. And so if that money is on the books, then any price to buy, then any price action to the downside will have to go through all those orders, which will slow it, which will reduce the dispersal of prices over that range. And so less liquidity, i.e. my orders not being there, means that price would get through those areas much quicker, would have a greater range, and then we'd be able to say it has increased velocity. So post-market, you typically see a degree of volatility that's higher than that you see during trading hours. And so the question is, if earnings are viewed as negative, how do you determine the velocity of a downward move to $1? It's not that I would ever try to determine the velocity, but it's also true to say, like as I explained earlier in the video, why it is that there's a bigger percentage gap between this support line at 124 and that in around $1. But putting that in context, I did then detail the momentum picture, how there's a degree of ambiguity there that reduces the validity of any short-term trade based on those tiny time frames, and why it is that you might see support in at around 111. It's also true to say that there's an area of interest at 118. So I'm not discounting anything, nor am I trying to answer that question in my own analysis, but instead outlining other more important higher fidelity probabilities that could be useful in a trading strategy. Sorry, Inichiro, I know that I didn't necessarily make that easier to understand there for yourself exactly. My question must be terrible? No, it was a pretty good one in that it allowed me to explain things that are important. I don't mean to cross any lines with my questions. I don't fully understand what can and cannot be said. Please forgive me if I make mistakes. I am very much new. You're totally welcome to ask, Wilfred Lucky. I appreciate that message, and you don't cross any lines. I didn't see the message though. What did you say? What happens if we drop below $1 for a while? How long do we have to pull back? Well, I mean, how long do we have to pull back? In context of the delinquency notice and trying to get those 10 calendar business days, pardon me, in a row, then you've got till the end of that day if you want to maintain the sequence that we're currently in. But if you're not desperately relying on those 10 days all happening in sequence right now, then we can start that cycle again. Stop clock will go, and we'll be taking it from the next time it recovers back about $1. The question you might be asking is, is this all we're likely to see on the bullish trend? And I'd say the fact that it's managed to persist above $1 for the amount of time that it has so far is testament to its likelihood of continuing to do those things. Because we're traders, we don't necessarily know what's going to happen in the future, but we have to draw out a hypothesis. And our null hypothesis isn't that price is going to stay the same. It's that the current trends are going to continue. So as traders, we look for continuation. South Georgia makes my accent stronger. I can imagine it would make mine stronger too, Flasher. Short-term trades are calculated below 1 year right now. Maybe. I think that's more of a tax definition. You know, some of my trades last about 18 seconds. Thank you very much for the answer, Jamie. You're an absolute legend. Thank you very much. With lucky, you're appreciated. What happens at the $4 mark? More volatility, if more volume interest, or will this trade less like crypto? At $4, the most important thing that happens is that it now becomes listed again on the National Market Exchange, which allows larger funds to buy into this thing, including things like mutual funds. Those mutual funds, there's a number of different ways that they work. Some of them are rebalancing and some of them are tracking funds. The tracking funds and the rebalancing funds, they would operate slightly differently. The tracking funds would be looking at how the rest of the market behaves. The rebalancing funds, they would be having a set amount contributed to any one stock based on its percentage as measured against the totality of that fund. So if you say I've got 20% of my fund in LPSN and LPSN increases in price, then it would become a larger constituent part of that fund, and so you'd sell anything over above 20%. If your parameter on the bottom side of that risk corridor was if it drops below 15%, then I'm always going to add more to it. Or let's say it's just that straight clean line at 20. Anytime price drops, you're going to buy more of it because it would constituent part of it would represent less of the whole. And so you'd need to add in order to take that back up to the 20% level. So when it gets back above $4, it enters new territory where new people are allowed to buy it, that their strategic approach to price will have and implications for the continued volatility for sure. For example, every time price moves a significant degree, rebalancing funds will sell a bit or buy a bit, which would bring it back to that mean a lot quicker. And that's why one of the reasons why you would see a reduction in volatility at above $4. Potentially, right? But potentially, it's not necessarily going to happen immediately. Immediately, there would be an imbalance between demand and supply, because that's what always happens with new market entrants. It creates this imbalance with more demand, less supply, which increases the likelihood that prices are going to move to the top side. And also, if it was becoming a constituent part of large funds, right, they're going to be buying millions and millions of dollars of the thing, right? You don't piss around with 2,000 shares in a mutual fund. Then that aspect would likely lift the price up a big degree as well. So it isn't what happens at any one price in any one moment. It's about the continued picture of liquidity on the books for any given stock, which is why, say, for example, you could see less and less people selling a stock like GameStop, yet price continue to go down over and over and over, even though there's less people selling it than there was the day before. And that speaks to the fact that there's less people trying to buy it. And it's about that dynamic and how that evolves. So lots to consider back above $4. Looking at that other side of the mountain from here is very difficult to do, but we can outline various principles. It's also true to say that back above $4, we'd all be proved right. Everybody else looking around at this thing would say, well, maybe that means they're also, if they were right from 54 cents to $4, and they don't think that $4 is the top, they're looking at 9. Right, as the next target, and then they think it's going to 69, and then they think it's definitely going to 30, I think too, but then on the way 69, and then subsequently 100, maybe 116, maybe more, then they're going to look at it having moved from 54 cents to $4 and think, well, that's a brilliant trade. And so that's one of the reasons that we're the gasoline on the fire, is that every time it achieves something significant, it then interests more and more people, and they're then aware of it, and they're aware of the phenomena that happened with GameStop, our association, a lot of the people in this chat box, and certainly my own, with that stock, and how we were some of the very, very first. Like I was in 2020, Owl was in, I mean, he's a mythical human being. We're not going to probe too much into his business, and I certainly am going to late NAD, but anyway, you can see he was very, very early, right? So, and he's not the only one here. So people are aware of that association. They know that we really know what we're talking about. They know that we pack a punch, especially now that we've of our behavior over the last 3 years. They know our skills, and they're not going to stand in the way and get crushed by us, right? They join us. They look for people like us. They look for that opportunity. They think it adds an extra benefit to their own trade, and then they go with you. So there's an awful lot of positive things that will happen above $4, and that's not even speaking to the tracking funds. So if price action starts increasing, if it starts getting added to more and more funds, then in some of those will increase their position sizes, which then drives price again, and you go to this spiral of the promised land. I don't get why there are so against. I don't get why they are so against. I can't see it because I've got this reaction behind it. Someone will have to emit in another message so I can get the fullness of your. They're so against us getting a tiny piece of the pie. They're not. They don't give a fucking shit about you, mate. They don't care about you at all. They don't know you exist. They're aware that people exist and that there's a large group of them, and they couldn't give two flying fucks, nor should they. This is the markets, right? You don't care that you're taking a bit off them, and they themselves are owned by other people. So there's always this reaction to a reaction. The disparate nature of the connections between people, the fact that the stock market itself is a mechanism of obscurity, and that's well outlined and detailed in American law and property law, freedom of speech, and so on. So they don't give a fuck, right? They don't give a fuck. The only thing that they notice is when it happens that it's an interesting phenomena worth taking note of, and that is either a large whale who could impact prices, or the sort of new phenomena is these type of communities which are now being recognized as specific entities on the market, when previously, before Roaring Kitty and ourselves created this path, it was mostly just, a group of disparate interconnected people who were behaving on their own, not necessarily with any unified objective, very much taking liquidity from each other. So in this new world, well, it's true to say that they don't give a fuck about any of us, and nor should they. It's also true to say that we have an impact and are recognized. So that's not to say that they care, though, about us. Certainly not. It's to say that, if a lion's walking through the jungle, it doesn't give a fucking shit about a mouse. But if it sees another lion, right, that'll be of interest to it, right? That would show up on its radar. They get so much they don't care about pennies. No, it's not that. It's not that either. It's that. I mean, I suppose there's a degree of analogous link there between the lion, the mouse, the lion, the radar, and so on. But that's not really what it is. It's that nobody gives a fuck about anyone, right? And nor should they, right? This is a reality of life, right? Nobody should give a fuck about anyone else. It's not the default mode. It's not an evolved trait. It's not a true fact. Man's inhumanity to man causes countless thousands to mourn. People really draw distinctions between each other. They do that because they're insecure about their own identity. It's a horrible, pathetic mess that is humanity, and nobody gives a fuck, right? Nobody gives a fuck. The fact that we do is something that makes us very different. It's why you find community here. It's why you recognize the same in each other. And it's because it's not really commonly found elsewhere. Nobody gives a fuck is the truth. And part of the reason for that is because we're all going to die, and there's a limited amount of resources. And part of the nature of human culture and human nature, part of it is that everybody wants what's theirs, and right, everybody wants more, and happiness is just the moment before the next moment you're looking for happiness. And the way you get it in today's society is by getting more stuff, and the way we get it here is by getting more LivePerson, right? But I'm not really speaking to the philosophical side of humanity there, other than to say, right, we also don't give a fuck what they think, right? There's only a certain, yeah, we generally speaking, we don't give a fuck about them either. Which they are trying to stop, but they won't stop what we're talking about. Yeah, so when I talk about fighting for change, I'm not trying to say that we're fighting for recognition, right? That would be strange vanity project. We're not doing that. We're trying to change the market so they're more fair. And what that isn't like some vague expression with fuzzy edges. What we're trying to do is demonstrate that price discovery is more important than price stability. And we are not fish, right? Liquidity is not oxygen for the markets, right? That's not true. What's true to say is that price discovery is what allows you to exploit your skills, to express your own talents, and as a trader to be more efficient, because you'll be right, right? Someone will be right, and those people deserve to be rewarded. It's not that you can control price and therefore get rewarded, which is a mechanism that's made possible by this worshipping at the altar of liquidity. That's something that's not properly articulated in the GameStop movement. It's definitely not discussed properly online. And we're not fish, like Sunjo says there. We're not fish, right? They'll come on the fish. It's not us. We're just cheering on everybody because of our compassion for the fish. LivePerson does make me happy. Yes, I hope so. I'm not doing a particularly good job of trying to make people happy today. So if that is something you were looking for and you're not getting it, I do recognize that. And I also don't care about it. I love fish. Minner loves the fish. We're not fish, we're live persons. Yes, yeah, we're really getting into the theme of things here. So 55 minutes in, we covered important details from the earnings of subsequent previous years there. We were looking for those key details in the following earnings, and we're going to draw then subsequently some conclusions about how the companies performed. We've outlined what they are. We've looked to the charts to talk about the implications of positive news or negative news. News being sentiment, because we call all the moves ahead of the news. The news itself is just talking about what we went on to do, right? They'll also then give a narrative to it, invent reasons for it, and be fucking stupid like the news is. And we'll be then living in the next day, the next day, the next day, and it's always talking about something that already happened, and who cares? It's like asking what the weather was like this morning. Well, it's this afternoon now. Nobody gives a shit, right? And you probably were aware of it, right? I'm changing my name to Happy. That is interesting. Happy Flasher. At that point, it will definitely have other connotations from its original meaning. Happy Flasher. Nice ring to it. Yeah, there's some more jokes in there. There's definitely some more jokes in there. Right, so that was a really good, quick episode. And I'd like to thank Minner very much for getting that gifted membership, making it their special moment for Cuba Lefora 19. Cuba Lefora. What a lovely name. Thank you for watching the show. We've got more memes coming this evening. They've had 3 today, and there's more hitting the channel shortly. If you got everything. These memes today, I felt were very clear. Obviously, you'll notice that some things have been referred to that we spoke about previously in the memes there. Shout out loud. And the reason for that is because either those are important details that were missed, or, which is like not actually the most common reason, or the things that they're speaking to are about to get incredibly important. Yeah, that's pretty much it. So those are the 2 reasons why you might notice things you've seen before. Also, there has been obviously behavior from the CEO of GameStop that a lot of people aren't particularly happy with. Now, when I say that, I got a number of messages over the last while. Man, I'm fucking gonna get so angry. I'm not gonna do it. Right. Right. Earnings tomorrow for LivePerson. We've got a live show, we've got earnings, we've got more memes, we've got more memes tonight. You've been the best chat box ever. You always are. Absolutely love you guys. Thank you very much for watching. Hit the like button. This show will be available to members if you want to watch it back. I'm sure there's something to learn there. Happy to answer any questions on the Discord, www.discord.gg/rockyoutcrop. And one of the memes today, right, this guy says to me, I saw your price targets. I watched your stream, like it was doing me a favor watching my stream. Like seriously, sometimes. And when is it going to get to those areas? And if you were there, you'll know that I didn't have a negative reaction to him at the moment, but that was because like This happens regularly. People do that sort of thing. But good advice for you is not to ask me those type of questions, right? Not to ask me those type of questions, because I don't want to fall out with you. I really, really appreciate you. And that would be tragedy, wouldn't it? So hit the like button, and there's another reason why we'll never fall out.